With tax reform in the news, you'll be hearing a lot about flattening the tax code, meaning in part getting rid of various deductions that benefit special interests. Let's talk about one of the most important, SALT, the state and local tax deduction. Ronald Reagan called the SALT deduction the most sacred of cows, and when his administration tried to get rid of it, the chairman of major New York-based corporations, such as Chase Manhattan Bank and American Express, teamed up with unions and mayors to go to war against it, and they won. Why? Here's how SALT works. Immediately following the constitutional amendment creating the income tax, the Revenue Act of 1913 created the SALT deduction, allowing individuals to deduct the amount in taxes they pay to state and local governments from their taxes to the federal government. The rationale was that if federal taxation got too high, it might absorb all the state's taxable resources, crippling local government. But looking at the modern era, what's happened is that it's allowed some states and local governments to raise their taxes and force the rest of the country to subsidize them. So states with high government spending, like California, Maryland, and New York, the state whose taxpayers benefit from the SALT deduction the most, are subsidized by the federal tax base from all states, including those that have worked to keep their government small and responsible, such as Alaska, North Dakota, and Wyoming, where people get the least from this deduction. The SALT deduction is also regressive, benefiting the rich and harming the poor. For those making under $50,000, SALT only saves them around 2% of their income, but for those making over $500,000, it saves them 7%. Getting rid of the SALT deduction seems like common sense, but politics makes it difficult. Blue states with big government are the primary beneficiaries of the deduction, so Democrats overwhelmingly stand opposed, and Republicans in those same states stand opposed too. Unfortunately, politicians have the incentive to protect what benefits their own voters, rather than what's fair to all Americans. And when it comes to tax reform, these states are just one of the many special interests looking to have their favored deductions protected. To learn more, click the link to the article on our website. I'm Kristen Eastlick. Thanks for watching.